Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. And a very good morning to all the fellow students, whether will watch this class, online class, or through the YouTube. And we share it to everybody and would like to listen to my lecture and benefit from it. Okay, for today's lecture is on the chapter 1. There is business organization. So for this chapter, there will be three objectives that I will be covering. Number 1, understand what is sole proprietorship. Number 2, understand the partnership concept. And number 3, knows the elements of the company. So these are the 3 objectives that we will cover today. If you pay special attention, you can understand these 3 objectives, so you can already cover the whole lesson, that what we are going to teach you for the day, and that's good enough. So for introduction, a person wanting to set up a business has to consider what legal form of organization should take. So in a business, it's a different entity from a person. We are a person. Business is a different entity, as you have learned through your company law. Company cases like Solomon versus Solomon, how we differentiate between the owner and the owner of the company. So here we are looking about the legal forms of company that we're going to set up, or you're going to set up later on, when you are out there doing your business, or when you're working with other companies, so you know what kind of company, that legal entity they have when you are engaging or when you're working with the company. So factors influencing the decision. How a person want to make a decision to set up what kind of company, and what are the factors that a person have to think of before setting up the company. This is very important because this is the initial planning stage. So if you got it right, it goes well. If you got it wrong initially, it may goes other way. So first, you would like to know how many owners the business is going to have. Let's say you want to set up a company. Do you want to set it alone, or you want to have another partner? Another partner means another owner of the company, or 3 owners of the company, or 4 partners? You have to think first. That is the first question you have to ask yourself. Second, what is the tax position of the business? Later on we can see, if a private company, different tax bracket. If a Sendirian private company, is different tax bracket. So you must go and find out the tax elements or the tax composition that is under the income tax law before maybe you want to need which kind of legal entity company that you want to set up. Then you have to think, can the owner take the risk of unlimited company or unlimited liability, or liability we call it. So we'll see if you are setting up a sole company or partnership, the liability is unlimited. Whereas if you set a Sendirian Berhad company or public limited company, the liability is limited. We'll explain as we go along, but these are the things you need to know. That's why you want to learn, and then when you want to set up later on back your company, you go back to the introduction that I'm teaching now. Then, does the owner want all the business profit? Well, if you want all the business the profit you do, you maybe need a sole proprietor. But if you want to share it with others, maybe you need partner. So these are the things that you have to also think of. Then, is there a complete privacy and affairs of the business for the owner? You want your business to be privacy? If you want a business to be privacy, maybe you need to set set up a sendirian MURAD company. Whereas a sole proprietor, anybody can access to your info when you file in through the SSM and all the government authorities. Then, in the case of owner illness or death, what will happen to the business? You have to think also, if you are setting a sole business, if you die, everybody died, not worry about talking about die or death. So what going to happen to your business? Who's going to continue? So these are also things that you have to look into before you want to set up the company. So now we will go to the types of company available in Malaysia that is now legally available. Maybe in future there are other types of company will be approved by the government, but we are based the teaching today on the curriculum, on the current law and current policy of the Malaysian government. We are talking about this company in Malaysia, but other countries they may have other types of company. So that later on you can find out yourself and you can add the knowledge from the knowledge that we have imparted to you. Okay, what is a sole trader? Or we call it the other one, sometimes they call it sole proprietor. Yeah? Sole trader or sole proprietor is the same thing, don't get confused. Yeah? Sole trader is a person who operates their own business. They may or may not employ other people. It is important to remember that sole trader is usually a relatively small business with little capital available for expansion, and the capital that has been invested comes from one source, and that is the owner. Sole traders are common business. Example of sole trader business, for example, like hairdresser, a plumber, electrician, and those who are self-employed. Normally they will set up a sole trader. And now we have people in the IT industry. When they start, they normally start the sole trader. Now we'll see what is the advantages of being a sole trader. Number one, profits. So we talk about profits, the all kept by the owner itself. He's the only person. If they make profits, all belong to him. If he lose, also he's the one losing. Number two, easy to run. Because you are one person, so you don't need to ask anybody else to make decision or whatever you want to do with the company. Thirdly, easy to establish. The process of establishing a sole proprietor company is very simple. You go to the SSM, company registration of the government department, and pay them, I think maybe now about 50 ringgit. During 40 years, when I set up my sole trader company, it's only 25 ringgit. I think now it's about 50 ringgit also, I'm not less. You can check from the online. Just pay them, simple form, and you can set up the company. Nowadays, I think within one day, you can register, or within 1 hour, you go down there and fill the form. All the form is in order. They will issue the license to operate the business. Immediately, you have a company to operate. Then, also, as a sole proprietor, you are in the total control of the company. Let's say you run a bicycle shop company, bicycle repair company, selling bicycle, and you are the owner, so it's up to you. Whether you want to sell the bicycle at what price, whether you want to make profit 10%, whether you want to make profit 20%, you can decide alone. Or you want to sell a discount at a loss, you can do it yourself. But if you have partners, you need to consult the partners. If not, you start fighting, and all the disagreement was started from all this kind of misunderstanding of the business transaction. Then privacy. As there are no other shareholders in the company because you are the only sole, nobody knows your trade secret, nobody knows how you want to run the company. So you have full privacy of what you want. Sometimes we need to do business, but we don't want to know other people knew what our trade secret. Because in business, there's always trade secret. Impossible that business is all the same. If all the same, my personal view, there's no business. Okay? You can't find in any book, but business must have trade secrets and must have your specialty. Yeah. so that you are different from others. Otherwise, there is no business. Flexibility. Very flexible working hours because you own. You don't have to work like the government department or even you're working with a private company. They have times when to start, when to finish, when to holiday, all kinds of ruling. Here, you can do. You don't want to open your bicycle shop today. If by example your bicycle shop, you just can close. You don't have to ask any other people approval or any government approval for you to close the shop. So it's very flexible, very flexible. Or even you want to sleep in the daytime, you want to run the business in the night time, it's okay because some business people run the business in night time. Yeah, so it's the flexibility. Okay, now let's go to the disadvantages of a sole trader. So what are the disadvantages? Let's take for if you got ill, you're sick. So who's going to run the business for a day? Oh, for example, we take another example, you're opening kedai makan, eating shop, yeah? And you are the one who cook in the shop because all the recipe of the cooking you know only, you can't employ to do it. And suddenly you sick. Then who's going to run the shop? You punya kedai makan, eating shop tadi. So when people come that day, you have to close because you're sick, very sick at home, or you are hospitalized. There's a problem where people may start distrust you. Oh, I come all the while to taste your food. I mean, I have that problem. Suddenly the shop closed. So people say, why these people don't get another employee to cook so that we don't have to go look for the shop? Or our taste bud is already now thinking to taste the sambal, now have to look for another sambal shop. So this happened. Yeah. So this is where the sole proprietor is going to have a problem. And then if again your customer who came just now saw your shop closed, he may go to another shop. Suddenly they find that shop much better than you. So in future they will not even go to your shop anymore. They will go to the new shop. So these are the risks if you run it alone. Okay, second one, unlimited liability. So if the things don't work out as planned, the sole proprietor could lose all investment because you're unlimited. A sole proprietor, as I said, is unlimited. That means anything you borrow, anything you do, is not the company, you are responsible. If the company, let's say ABC Enterprise, borrow 100,000 from the bank or from anybody, not from the along lah, yeah. So we don't encourage you to do illegal borrowing. Go to the bank for the proper way. And if your ABC Enterprise cannot pay, the liability goes to you. You ABC is your name, for example, you have to pay. This is the one main disadvantage compared to a separate legal entity company, for example, the MURAD company. Thirdly, lack of continuity. Because the owner of the business, there's no guarantee that the business will carry on running once the owner decided to stop. For example, you have maybe read in newspaper, local company here, a local food stall or local shops selling very nice traditional recipe. In Seremban, we have this rice bowl or kind of things, beef noodle rice bowl, very famous. But the one running is just still the people which already over 80 years old, because he's sole proprietor and he didn't train anybody to take over. The children are not interested to take over. So if he died today or if he's sick, he stopped doing, cannot work. So what happened to the business? The business is very good. It's make money. Just because that you are sole proprietor, nobody continue the business, you have to close down. This is very, very bad as a business. Yeah. Then as a sole trader also, you have to work sometimes long hours. You can read in the Google, I see some shops nice food. You start working 9 o'clock in the morning, have to finish 9 o'clock at the night. Because you have to cater the morning breakfast, you have to cater the lunch, you have to cater the evening tea, and you have to cater for night. Then tomorrow morning you have to start back again. So because you are sole alone, you can take a break. Yeah? And then another one is difficulty in raising capital. Small business find it hard to find startup capital. Actually, the owner might have to put in the house as insurance to borrow. Because you're sole proprietor, you want to borrow money. You want to go to the bank. The bank will ask, who's your partner? He will ask all the questions that I've been telling you now. If you die, who's going to continue? If you're sick, who's going to run the business? So it's very difficult for you to borrow the bank money if you are sole proprietor. So you have to start with your own fund, your own money if you got. But if you don't, this is the problem for you to start up as a sole trader. Then limited specialization. As the owner has to be a purchaser, lorry driver, accountant, and extra. What we're trying to say here, in the economy of scale, if you learn economy before, there are specialization job. One person do one job, one person do another job, another person do another job. For example, if a big restaurant, one person do the cooking, one person do the serving, the other one maybe do the cleaning. But if you are sole, you are the one to do the cooking, you want to do the cleaning, and you also the one to go to buy, to go to the market to buy the groceries or the vegetable or the fish or the meat for your shops. So again, this is where a disadvantage of a sole proprietor. Limited economies of scale. Yeah. We take a small construction business, will have to hire a lorry to do the required tasks, as they would be cheaper, but larger business would buy its own, as it would prove cheaper due to the fact that lorry is continuous use. For example, we take another situation, forget about the kedai makan or restaurant, now we go for like a small construction company. Construction company, that means contractor. People employ them to build house, to build road, so we call it a construction company. If you are sole proprietor, you have to carry something, you have to buy a lorry. But the lorry already carry certain item that you need. After that, the lorry is not doing anything. But big company, they don't buy a lorry. They hire it from the lorry people or lorry owner. So because they are specialization. Whereas you owner, you do everything your own. So this is another disadvantage because of the limited economies. Okay, that's how I've done on the sole trader. That is the first type of company you can set up. Now, second type of company, partnership. Okay, what is partnership? Any company more from the sole proprietor, you go to 2 or more until 25, you can set up a partnership. Yeah, maximum is 25 members in a partnership company. Purpose to same thing, to run the business just now. But partnership require a high degree of trust and are very common fields as medicine. So partnership, maybe example here we can put like the private clinic. So you can see 2 or 3 doctors together, they set up the clinic. Some maybe one person maybe specialized in general practice, the other person maybe specialized in ENT, ear and throat disease, the other one maybe specialized in heart. That kind of partnership which they need, because if they just run a general practice, people have heart problem, maybe didn't go, it's not going to their clinic. So in this case, they have to have a partnership. I mean, impossible one person can run. But there are also, if you're talking about clinic, there are people also one person running. It's not a problem. But generally, they will have partners so that they can offer multidiscipline services in the health industry. Other than that, partnership, you can see lawyers. An example lah, yeah, I'm telling you, doctors, lawyer firms, architect. So normally they run in partners. Yeah, they cannot be run alone. For example, if a lawyer, if you run alone, there's a lawyer legal firm run alone. But you take, for example, if they don't have partners, if he's sick that day and there's a court case, who's going to go to the court? Who's going to handle their client problem? So it's impossible to run as a legal firm as a person. But there's nothing wrong and it's not illegal or cannot be set up as a sole trader. We're just giving you both sides of the story. Then partnership. When setting up a business, a person has to decide whether to set up a business on their own or with others. Yeah. So as partnership, as I said, you must have more than one people. Then what you have to think of, just now like as a sole trader, what you have to think of. And for a partnership, what you have to depend on. First, how much control they want over the business. You're going to partner another person. How much control you want to do in the business? Because the person, your partner also want also control into the business. You will say, okay, if 2%, 50-50, we're happy, then you can do. But say we two of us, but I want to control 60% of the business. You control 40%. It doesn't work. 4%, okay, we control 1/3 of us. So these are the things that you have to think. If you're okay, you're not controlling the company, it's okay. But if you think you want to control more, then it's difficult to set up a partnership. Better set up a sole proprietorship. And are you prepared to share the profit? You see, the business is good. The profit is going to be good. A lot of money coming. Do you want another partner to be with you because you have to share the profit? So maybe some people greedy, they don't want. But some people say, well, let's share the profit. Maybe they can help you to get the money together. Maybe both of us can get the profit more. Yeah? It's up to you. Can they raise necessary capital to start up on the business side? Let's say you need a clinic. You need to spend 100,000 ringgit to buy equipment, to renovate the shops, to pay the rental, initial rental. Do you have the money? So if you don't have, you got only 50,000 ringgit. Whether you need to invest 100,000 ringgit, you may need a partner. Otherwise, you can't do it. So these are the things that you have to look into. Okay. Then there is also a risk factor. Is this person prepared to accept risk unlimited liability? Okay. This sole proprietorship or partnership, they have the same problem. There is the unlimited liability. What is unlimited liability? I already explained just now. You just can check back. The partnership or partnership also setting up partnership is also easy. Yeah, same thing. You go to the SSM office, take a form like sole proprietor, and now you just fill everything, but you have to put 2 or 3 names your partner, and they can do it within now maybe 1 hour you can get it done. Yeah? Solicitors and accountants are not required to run the business. Sole proprietor partnership, you don't need a legal firm to attach to your company. You don't need to appoint auditor to do your account. You can prepare your own account and submit to the government. So costs are much cheaper. Yeah? Profits belong to the partners. All profits belong to you. Yeah? Except maybe those taxable, you have to pay tax to the government. Privacy. Only tax authority need to be told how much partners are earning and profit from the business. So another privacy, whatever you earn, you only inform through the tax form. You no need to submit your audited account to the SSM. People can access to your company, whether they know whether you make money or loss or how much money you make. Yeah, compared to the limited company. Private company, that means you will submit your own personal income tax. How much you own just now from the profit? You own 50,000. Your partner own 50,000. You share the profit. Then you fill in your income tax. So only you and the income tax officer only know. The rest, other authorities are not accessible. So this is another privacy that you have. Often, good relation with your partners. You need to have a good relation with your partners. You start fighting in the partnership, that's the end of the story. Raising capital for a business is easier than the sole proprietor. And now maybe you go to the bank to apply the business, to buy some loan. Maybe the bank look it more favorably because the question, as I mentioned earlier, if someone sick or someone died or something happened, at least your partner can continue your business. Different expertise for partners. Examples, one specialized in accountancy while the others in marketing. Well, same like just now, I said doctors, maybe they have different specialization. But now we're talking about, like say, you're doing some business other than selling fruits or shops. So one person can in charge of your account, the other one may be doing the marketing or buying the product. So it depends. Yeah? Some businesses have sleeping silent partners. They play a little role in running day-to-day basis, and business might provide. Okay, what is sleeping partners? Okay, I'm just trying to simply tell you what sleeping partners. Sleeping partners are investors. Okay, just now we talk about partners. Later we talk two partners lah, simple. But now these two partners working together, they are, we call it active partners. But there's another kind of partners, two also. But this fellow may be very rich, already pension from the government, they got a lot of money, they just invest. Because you need a capital 100,000, you got 50,000, this pensioner will put in another 50,000. So, he just become a sleeping partner, but he's not going to work day to day with you. You may earn the salary from what you have done, he may only share the profits at the end of the day, or if you're lost, there's nothing to be paid. Yeah? Okay, now we go to disadvantages of partnership. Common case disagreement between partners, which can be bad for business. Again, we have to very reiterate. You want to have a partnership, this is the main problem of partnership. First, initially they start, after they start fighting. That's where the end of the story. Even a good business, if the partners start fighting, it goes to the drain. I'm going to tell you that. I'm 40 over years in business. I can tell you, I can vouch this is happening. Yeah? Some partnership don't have a deed of partnership, which can be bad for business. Okay. There's some partnership you can have an agreement. We call it deed. It's like the limited company. Limited company, they have their own proper memorandum of association. As you know, it's a separate legal entity. But for a partnership, you can do like the M&A, but it's not M&A, it's just like a deed. That means agreement between you. What is your job? What is my job? What are going to happen? What are you going to share? Profit or all kind, you put into a writing. We call it deed. But some people don't get. They just register a 50 ringgit partnership or 100 ringgit have to pay. They just run the business. So when a problem comes, there's no agreement, there's no deed. This is where they become very, very bad. Yeah? These are normally the starting or the failure of a partnership. Most partnerships are relatively small. So partnership, we're talking about partnership, it seems like private, sole proprietor, but maybe it's a little bit bigger. As I said just now, like the sundry shop, furniture shop, all these kind of things lah. Or maybe like the doctor, architect, they need a partnership. They can run alone. Not like the sole proprietor, they can run alone or they can need partnership. Partnership normally impossible for you to run as a sole proprietor. That's where the partnership comes. Okay, done. So the third kind of company, you call it limited companies. So what are limited company? Or in Malaysia, at the end they have a Sendirian Berhad. You say, my name is Murad. Murad Sendirian Berhad. I have a sawmill. I put there Kilang Papan Murad Sendirian Berhad. When you see the Sendirian Berhad at the end of the word of the company, that is called limited companies. So every limited company have a shareholder. Different from the partnership, we call it partnership. Here the same person, if two person in a partnership company, we call it partners. But if these two person set a Sendirian Berhad company, a limited company, which minimum numbers need to be two, these two people is no more called partnership, we call it shareholders. Okay? Different terminology under different company. The term limited company refers to the fact that if the company goes into debt, each shareholder risks losing only the amount he has invested, and this is not money. Okay, we talk about again. If you last time we have study the company law, case of Solomon, Sir Solomon is the first major case in the whole world, and every law faculty is using this until today. The differentiate between Mr. Solomon and Solomon Limited or Solomon Sdn Bhd. So anything with Solomon Sdn Bhd is only goes to the liability goes to Solomon Sdn Bhd, does not affect personal of Solomon. Go back and read your case, Solomon versus Solomon, if you still can't remember or you can't understand what I'm telling. So it's a separate legal entity. Anything happen, the liability only goes to the company, which is the Sdn Bhd, which here we call it a separate legal entity already. Okay. Then the owners of the company called shareholders. Okay, done already. They have a limited liability. Two documents required to register a company. I already mentioned minimum to set up a liability company, or in Malaysia we call it Sdn Bhd company. We need minimum 2 people, and maximum for the limited company is 50. Yeah. Go back to your notes, what you've learned before. It's agreed by the people setting up the business. The article of association give detail. Okay, so here we have the article of association, whereas partnership don't have unless you want to put it into a deed. This article, memorandum and article of association is a compulsory document for you to file in the SSM, Syarikat Suruhanjaya Malaysia, before they can incorporate or they can register your company. Yeah. So what is this memorandum? This is basically a CV of the company. CV means your current quality. Like person, kita ada CV. Normally when you want to ask for job, maybe in future, maybe your English teacher already teach you how to do your CV. That means your name, where you study, where you born, who's your father, who's your mother, all kind of things. We call it CV. So company also, we need to set up the CV in the memorandum to submit to the government. For example, this company, what's the name? This company, what you're going to do, the activity, what business you're going to do. This company to have how many shareholders. This company, how much is the paid capital. This is the CV that we're talking about here. For you to operate the business, or what kind of business, where is your office to be here, is there a branch here, branch in another place, or are you going to open a branch overseas? All must be written in the memorandum articles. What happens if you don't put in the memorandum? Today you have the office here, tomorrow you want the office in Jakarta, or you want the office in Kuala Lumpur, and it's not in the memorandum article, it's not mentioned in your CV of the article. It's illegal, cannot. What you have to do? You can amend the article to add on this kind of thing for your future business. Okay? Okay? Every year a limited company has to send audited account. So different from the sole proprietor and the partnership, limited companies, you have to submit every year to the government your audited account and your annual report. What you have done, the whole day, whether you have done anything, you expand your business, you need we call it annual report. This annual report, normally you present it during every year company annual general meeting. In annual general meeting, you discuss all the business of the day. Then that report, together with your audited account, have to submit to the government through the SSM. Yeah? And here, anybody can access to your information, so there's no privacy. So here, why we said just now, in Sdn Bhd, is no privacy compared to your sole proprietor or your partnership. Okay, the last one, I think we call it private limited company and public limited company. Okay, it's the same thing. Okay, one is a Sdn Bhd, one is a Berhad. Let's say my name, MURAD Sdn Bhd. What is different in MURAD Berhad? So there are two different names. Sdn Bhd means maximum shareholders 50, minimum 2. But for Berhad company, minimum 2, maximum unlimited. So this company normally you can see in the stock exchange where they listed the company down there. If you have now a company, let's say MURAD Sdn Bhd, if I grow big, I need more capital, I need more shareholders, I can convert into Berhad and get the approval from the government to list it in the stock exchange. There, your shares and can be buy and sell, traded freely. Whereas the Sdn Bhd just now, you can't sell your shares to other than those shareholders inside the company. You refer back to the company law. Yeah. Okay. Minimum share capital for the Berhad company According to the government ruling in Malaysia, 50,000 ringgit. Depend on which country you are to do the startup. Whereas the Sedia Berhad only 2 ringgit. 2 ringgit. Partnership, nothing. We just set the company. There's no paid up capital required. Size and number of shareholders. The number of shareholders is likely to far greater than PLC than the limited. As I said just now, the Berhad we call it public limited company. The Sedia Berhad we call it limited company. In Malaysia, I have to explain the Malay word unless you get confused. If Sedia Berhad, that means it's a limited company. If Berhad, this is called it public limited company. Don't get me wrong, it's the same thing. Control. Limited is controlled by shareholders in theory. If a limited company, the shareholders will decide what the company want to do. Then they will ask the director and the manager what to do. Whereas in a limited company, you have every year shareholders' interest are limited in annual meeting. So in a limited company, during the AGM, all the shareholders' interest will be there. The shareholders can speak. They said, what happened to the company? Why are you losing? Why are you making less profit? So the shareholders is the one controlling the company. A limited company, the shareholders, the directors and managers are often same people because company is small. Okay, there are 2 types of limited company. Some limited company or Sedia Berhad company, there are only 2 shareholders and 2 directors. So the same pula is director, same pula shareholders. That's one scenario. But there may be another scenario, 50 shareholders, but directors only among the 50 of them only 4. So these are different kind of scenario, but it's the same kind of Sedia Berhad company. So some are big one, some are small Sedia Berhad company. Okay, limited company. In public limited company situation is different. Okay, if a public listed company, that means listed in the stock exchange in Malaysia or anywhere in the world, the managers and directors are different from shareholders. Okay, it's very important. The shareholders and directors must not be the same to avoid conflict of interest. So normally there's so many shareholders, 1,000, 2,000, then they appoint the directors. They vote in the annual general meeting to appoint the directors. It can be also one of the shareholders to be directors, but now they cannot themselves appoint because there are maybe 1,000 people have to appoint. If 1,000 people want one of the shareholders to be director, it can be done. There's no problem. But you cannot appoint yourself simply like the limited or Sedia Berhad company. So the advantage of a limited company ataupun public limited company atau Berhad here is easier to attract shareholders to invest money and business because of limited liability. Enable business to grow and become large. One of the main things that when you invite people to invest in your company, easier to get. Because why? Today they invest, you issue share to them. Tomorrow they don't like the company, they just can sell. Because they can sell in the stock exchange. That's why the stock exchange is a market. Like you buy and sell in your market. But here you buy and sell the shares. So if you need more money because you're a public limited company, you just can issue more shares and people want to buy, you can get the extra money. Whereas in the private company, you cannot simply Sedia Berhad company, you cannot simply offer shares to outsiders to collect money except to your current shareholders only. Okay? So because of that, public listed company, you can see they grow very fast, very fast. For example, in Sedia Berhad company, you want to build a project, 1 million, you need a capital 1 million. All the shareholders have to come up with the capital. If they don't have capital, how are you going to run the housing project? Whereas a public limited company, they want the project, this project need capital 10 million. They don't have money, they can issue shares, anybody can buy, they got the money, they can run the business. They can run the project that they want to do just now. So that's why people, big business, they need this limited, public limited company. Main reason is easy to raise fund. Even banks, easier they give loan to big company rather than small company. But right, they should not. But the practice is there. The bigger the company, the more shareholders they have, the much trust the financial institution have into the company. In PLC company, situation is different. Okay, now disadvantages. Disadvantages of the limited company. General public has access about the company information, so it's totally no privacy. That's it. Number two, giving information out is also costly in terms of administration cost. And in the public limited company, every time you want to do anything, you have to inform the Colombo Stock Exchange, because they have to inform all your shareholders. You maybe have 10,000 shareholders, and some may be in Malaysia, some may be overseas. So the only they want to know what you're doing is through the information you have to give daily. If you have anything substantial news to the stock exchange, that a lot of costs incurred to do employ people to give the information, to make the report. Yeah, you just cannot give simply report. Their standard kind of report must be very professional report. It cannot be like a pasar malam report. Yeah, so these are the things. Public limited company must comply with stock exchange. There are hundreds of ruling of the stock exchange that you as a berhad company have to comply with. So it's more difficult to manage, more difficult to run. Compare, we said from the beginning, I said from the beginning just now, if it's sole proprietor and partnership, easy to run. So there's two contradicting things that you have to understand. It has been known that sometimes the only interest for shareholder is a short-term profit. For public company, mainly the shareholders are thinking short-term gain only. Yeah, either they're looking for the capitalization from the shares in the market, or they're waiting for dividend, then they get out or they sell the shares. Whereas sendirian berhad company or limited company, normally they are looking for long-term partnership. Okay, the last one little bit is about multinational company. Yeah? What is multinational company? Firstly, we have a parent company, then this company which owns and controls other companies under the ocean. There's some company in public listed company, they are big as a parent company, then they set up their small company because of the different business. One company may be in pharmaceutical, one company may be in property, one company may be in finance. Yeah? For example, multinational here, we can say Sime Darby Berhad. You go to Google, in Malaysia, Sime Darby is a multinational. Why? Because they got so many companies and so many different business entity, business activity. So they have set up a different subsidiary. So that kind of company we call it multinational company. It's still a public listed company, but they can set up down there limited company or even another public limited company. It can be both. Yeah? So that under the parent company, we call it a subsidiary company, owner of the main parent company. Benefits of becoming larger size. Why this multinational company exists? Yeah. So it allows you to compete with a higher level. The bigger you are, you can do big business. Yeah. If you are small, you don't go to do business in Kuala Lumpur. In Kuala Lumpur, there's a saying said that big shark eat a small fish. So if you're big, you can go compete with the big people. If you're small, don't go. Because in the sea, the big shark always eat a small fish. So same thing in the life here, outside. Yeah? That's how I can easily explain to you. Lower cost of production, because they're big, that kind of thing, so sometimes their economies of scale is much better than our private. For example, they need one accountant to run a big company. Here you also need one accountant to run a small company. The salary may be the same. Example, yeah? Because of the economies of scale. Cost effective, example, where you locate your production. Sometimes because of big multinational, for example, Korean company, or even American company. So they locate their subsidiary company in Malaysia because the cost of producing the chips or whatever product is cheaper than America, or in Japan, or in Europe. So that's why the multinational company operates. They have the headquarters in Europe, in Germany, but they have a subsidiary company in Malaysia, Indonesia, or cheaper India to get a cheaper cost for the product, so that in the end the product they can make much profit, or the product they can sell at the end product in Germany, where they got the component from all over the world, is cheaper. It's a good example if you can Google into Kia Motor. Kia Motor, only I think 10% of the product is the component is produced in Korea. The rest are all they import from overseas. They buy from where it's cheaper. In Malaysia, they thought they calculate the tire is cheaper. They will buy the tire from Malaysia for the Kia motor in Korea. Yeah? So these are things why multinational company exist. Okay, what is the advantage to host company? Okay, for example, I said just now, the Korean company, they may have a subsidiary company here producing tire for their car company in the Korea. So the advantage for us, we get jobs for our local people. They can use our rubber, natural rubber for the production. These are the advantages that the host country, that means the Korea is from Korea. We are if they set a company here we call it the host country. Yeah. So they increase employment for people and in specific area. For example, American IT company. So they have a lot of microchips coming here. So our people, host country like Malaysia, learn how to produce microchip and so on this the higher technology. If they don't set up the company in Malaysia, Malaysian will never learn this kind of things. Yeah. They educate workforce further. They learn and educate our workforce further. Improve the standard of living, because more people got job, they pay higher salary for the specialized job, so our standard of living in the host country become better. Bring new technology, as I said just now, like say for example IT, they produce chips, everything, so this is a new technology, the host country benefit. Okay, what are problems for MNC, multinational company? Size, there are a lot of communication problem as the company has complex hierarchy. This one is true. I have last time worked with one American company from America. We selling their generator set down here. So their culture, our culture is not the same. So to follow their culture and our culture is very difficult. So these are the problem we come across. And the hierarchy of company is different. Our hierarchy of company is different. And the time is different. Here we are sleeping, they are working awake down there. So we have to communicate at night when we're supposed to sleep, but we have to communicate with our bosses in America because they are daytime. The subsidiaries have been known to compete against each other due to breakdown communication within the multinational. Sometimes the American company, they subsidiary in Malaysia. They also have subsidiary in China. So the China product, they produce cheaper than in here. So we also have to compete among the same subsidiary. Yeah? So this is what we're trying to understand. Law and politics. Different countries have different legal and political system. As I said just now, yeah? Time different, system different, everything system different. These are all the disadvantages. It is very important also to understand the system. So for us, need to understand the American culture for us to run the business up here. We cannot use our own system culture to run an American subsidiary company. Okay, exchange and rate fluctuation. MNC sell their product in several different countries. It can have an effect on the profits. So because the product, let's say the Kia motor car, they produce motor car down there, but when they sell back the motor car in Malaysia, maybe different price. In America, different price. This all sometimes creates problem because we said why here cheaper, why there expensive. Last time Malaysia Proton car, when they produce Proton, you can buy cheap Proton even in UK rather than the price down here. These are all kinds happening. Okay, what are the disadvantages to the host country? For example, now the Kia motor or the American IT company which have the subsidy here. Normally the subsidy here, the American subsidy, they will get profit. The money they will send back to their host country, their home country. Yeah? Health and safety issue. MNC know to cut corners when it comes to health and safety issue in hosting country. So for American company, they have a very high standard health and safety. But when they come to a host country, they don't bother sometimes. They don't follow their standard. They have been known to gain some political power. Sometimes they use because their workers here, maybe, for example, here we have Samsung workers in Seremban, 6,000. So because there's so much people down there, they even use that as their political power to bargain a lot of things from the host country or host government. Sometimes, I mean, we're talking some theory happen, some country happen. Jobs offered to locals are actually low skill. And then when they offer a job from us, they don't teach you really the high skill, it's just the low end. Actually, the workers forever is become workers. They will never become the queen bee. You know queen bee, yeah? You just focus. Difficult for you to become the queen bee. These are the things that happening in multinational. Okay, we have finished for the subject today. It's quite detailed. I explained to you, and I pray to God that you can understand. Or at least already posted. You can watch the video how many times you want. And you still don't understand, you can email me or you can post the question online. That I will respond immediately. Yeah. So we have talking just now in summary. Understand about sole proprietorship. Understand about the partnership concept. Actually, we also talk about limited company, public limited company, and knows all the elements of each of the company. That's what I've been teaching you the whole lecture. So you can understand this. According to our syllabus, you have done for this class. Again, thank you very much. Please contact me anytime. Assalamualaikum warahmatullahi wabarakatuh.